What's going on, YouTubes? Time for another recap. Let's get into it. Another all right day. Little slow, little grindy, but we made it out alive like we love to do. So we had an over-under call today from the 15-minute opening candle. So if you see the Fibonacci here, that is a high-low 15. And we picked the golden pocket like always for an over-under. And we devised this beautiful higher-low, higher-high structure. Gave a target out of 597.72 for us on SPY. And we nailed it. All right, so I like to draw these pretty pictures in our chat for people to utilize for profit targets, entries and exits, and what to look for general trends. So if you want to trade with us live and see these charts and see these entries, exits, and walkthroughs on these trades, please come give us a shout. We got the link in the description, right? So no big Twitter calls here. On the last bit, let's go to the Discord here. The last call I was talking about here. So I jumped in and I said, guys, we're going to be riding these anchors up. I said right here, your final long sweep is right here, elites. Long the 5-minute bottom up VWAPs to golden zone target would not chase long, just buy the dip into the anchors. And that's what we had called right here on the NQ. So these 5-minute anchors were rolling up at 21,541, 553, 564. And of course, you can see all these are no tag anchors, which means price action has a great chance to tag back into them and go long. And I wanted to go long into the gold zone, and we did another price target. So let's see how that call went before we left the Discord. So that was the call. Here's the picture. Go long off. And if you notice, I said over the 10 SMA as well in our chat live. So here's that 10 SMA that rode. So we didn't catch the anchors until a little bit later after the gold hit. So we came up, we hit our golden target that we called long. We didn't backtest the anchors yet, so the play is still there. It backtests the anchor as I called right here on the 3-up, comes down the perfect to the penny bottom, and long she goes, because our second target for QQQ on the day was to get back up to the 15-minute high-low, equal highs, right? So I have it charted off right here. Before I left my group, I gave everybody the play and said, hey, guys, check this out. Anything over the golden pocket, we're going to come to the top of the 15. So if I go to the 15-minute chart, this is where the opening 15 candle was. Notice the Fibonacci, high-low, like we love to do. Golden pocket's 521.12, so I called anything above the golden pocket. We'll go to this gray box, 523.04. So I got off the stream at about 10 a.m. We were right about here, so I drew this up for the group, and I said, just watch for the support here, go long off the 50, and bang, we called that one. Pretty nasty. So from here to target, we're looking at about 80-some points. So 80-some point call for the end of the day there on NQ. Then, of course, we went even a little higher. Our last kind of bonus round we talked about was getting up to the pre-market high, 523.62. We didn't quite make it there, but we only called the gray box, what I called for my chat here. I said, guys, above this, whoops, golden pocket, 521.12. That's where that next higher low leg is going to be. That's where your continuation is going to be. Let's check the 5-minute chart for some confirmation oscillation. So one big takeaway from here, we like to use, remember in the last video, if you did not see the last video on how I predict these markets every single day with VWAP and oscillation, and most importantly, algos of Fibonacci, link will be in the description. If you notice our oscillation indicators today, we had a banger of a pre-market squeeze. And we had a lot of reasons for this squeeze because in the last video, we talked about the CPI candle data, and we put a big old green box right here. And I wanted to see it down, best case scenario, to the GP. Now, this gives us two different scenarios, great ones for later on and vice versa. So 514. We'll go over this here on Qs. This is where I drew that green zone yesterday, and I said I want to see it come down under 514. We'll hit the golden pocket. If not, then we're going to go squeeze right back up, right? We talked about the moving averages on the daily, 50 and the 10, and we needed to drop or not open into those. We needed to open under them for us to have a chance at failing yesterday's closed lows and then come down to that golden pocket, and then we're going to go back long. So still over long thesis. Everything was working out, but we didn't get any of the 514 underneath. So that play went all the way to like option D, right? We didn't really cover a full squeeze. I wanted to get over under, right? The Fibonacci. So if we got over under the CPI top right here, 514, right? And we broke under, and I said, yeah, it'll probably just chop, let it open up right here. Best case scenario, we come down to the golden pocket, we go long. Worst case scenario, or awkward scenario, we end up way down here and push into the GP, and then we pick direction. But way later on, option other, we had the moving averages to deal with. So if we came and opened up over the 50 SMA, this big dash red line, and the blue is the 10 SMA, big dash line, those are the daily moving averages. So we opened up above those, and we had quite the push. Now, that's perfectly fine because we called a gap up short. We seen the pre-market squeeze, and we got squeezed out for a couple different algos and a couple different reasons, actually, is this 514. Notice we defended the CPI top. This is the CPI top of the data candle right there at 514, right? Then I put a golden fib out because we've seen this big pre-market squeeze run, which is perfectly fine because I high-load the CPI candle, right? So Fibonacci, high, low. That gives us a target of 521.84 if you do the high-low on the daily chart. This is a very important candle because we had the CPI gap up and it maintained a gap on the daily. So in the gold levels, you're going to see these CPIs. And now let's look how clean this was for our opening morning. So the first trade call I did was short. I was short right out of the gate up here, and I said it's not going any higher. We have a really big instance of resistance here because this needs a tag, okay? And I'm all about first tags. Price action needs to come into a Fibonacci level, into a golden pocket, 50 SMA. You'll hear me say that all the time. When price action hits it for the first time, it's very, very large of an over-under. Now, when it hits also, it's a magnet. If it hasn't hit, so wherever price action is, for example, today, the price action was above the 1618 target at 521.84. Notice the pre-market was way up here, 523.62. So what did I do? I shorted the open. Why? Well, we just had a monster run. We were cooked on the RSI. We had the MACD giving indecision on the backside. And right before open, we seen just a tiny little bit of decision on the MAC. But most importantly, excuse me, we're near 90 on the RSI, and a couple of these pushes, very, very hard to continue a squeeze. Now, don't get me wrong, I love top squeezes that continue up. Not when the RSI is 90, and not when we have a daily gap up CPI candles 1618 magnet. What does that mean? The price action is above it. It needs to come down to it. So I shorted the opening gate, and I said yesterday's highs was going to be our short target because there's no reason for another gap and go, even though we had this kind of pre-market with no data, no news, just a monster squeeze off of 50 and 10 SMA, right? Which, no big deal. We're above 514. The trend continues. So we squeezed that up. We traded a little bit of pre-market, not too much, but we traded the big short at the morning here, called that all the way down, and then we charted off the 15. And we said as long as we're underneath the golden pocket of the 15-minute first candle of the day, right here, this is going to be a resistance check. So all price action under here for the opening range is going to come down to yesterday's highs. Okay, so this dashed orange line is yesterday's highs. That means price action up here opening was a gap up. That gap up came down to yesterday's highs. Filling that gap, again, is a common gap. Same play as yesterday, right? We had a very sneaking suspicion that we weren't going to hold the gap up on jobs data, 7:30, right? I called downside. We got her. Same exact scenario because algorithm, magnets, and Fibonacci, they're extremely important. They're very simple to use. The other resistance point, this is the jobs data here, 7:30 a.m. If I extend this to the right, we had an extremely large resistance play for the 666 as well. And if you notice, we're on the 5 minute. I'm supposed to have the 1 minute. It's a little lower on the 1 minute. It's right around here for that 1 minute. So take this, move it down to the 1 minute a bit. But yeah, the pre-market high and the 1618, we had mass resistance right here. So we shorted the open, and then we had the pop off right here. Now notice, geez, you zoom in here. This is shying. Price action came down, almost hit yesterday's highs in the orange dash line. Price action came down, almost hit yesterday's highs, orange dash line. So we shied it twice. So all the pops, not correct this bar. All the pops that we had seen into the 15-minute Fibonacci range, right, the high-low, was resistance GP. So the giant orange box that we drew right here is golden pocket. So all these pops into the 50 fib of the 15 sends us down to the bottom, right? 100% fib right here. It snuck out, and we call this, some people call this liquidity sweeps and all sorts of stuff, but fresh low scam reversal is what I call it. Same with the fresh high scam. These things like to play out a lot. There's two examples right here where we had price action stalling out at that golden pocket bottom right here of the 15. So you can just see all these wicks, stall, 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 and then fresh high out of sequence because this wick, this wick, this wick, this wick, this wick, all rejected under VWAP and 10. Fresh high, scam. Fresh low, scam. Right back up. So when we've seen these two sweeps come in, we got the gap fill I wanted, and then after the gap fill was done, everything was bullish, and that's when I made this call with the anchors for my Discord group when I left, and I said, just look for the long. Anything over the gray box is going to the next gray box. So we had this beautiful call here, and again, I think it was about 80 points we said. Yep, just about 80 points. So another beautiful call at the end of the day. For SPY, it wasn't too much different for the breakdown here. We have a very strong gap and go, and my other play was ES long that we have drawn on Twitter. I'll go over that real fast here. So we had over under right here at 596.45. Again, this is just the 15-minute opening range high low because we didn't have a whole lot to go off of today. So again, here's your 15-minute first 15 of the market right here. High low, that's it. And then I go down to the intraday charts like the 5 and 1. And then I play accordingly. So I box out at the purple, the golden pocket. The golden pocket, obviously, fibs are drawn from the high-low 15. That's your golden pocket from 61.8 to 382, 38.2. And we said long 596.45 to 597.72. So this was another banger. We clicked about 8-9 points off over here, ran that baby up, got a beautiful ES scalp. And then obviously for the day, we said 1618 was going to come up. And then whatever it wanted to do after that was, it's up to the SPY. I wanted to trade Qs after that because of the divergence. And the divergence between the two tickers here, if you don't know what I'm talking about, we had that 1618, squeezed up, got close to 600. Excuse me. Ooh, psychological, wasn't going to happen. But this golden pocket from that 15, I deleted it because it's a little easier to see, was all about the first algo trend tag here. Now, this Fibonacci point, like I always say, needs fills. Inside Fibonacci, especially daily high lows, I talk a lot about first tags, golden pocket tags, and fills. I almost treat them similar to what gaps are, right? So you see this large golden here. Let's just make it real clean for you guys so you can see here. All right, so this candle right here was the deciding factor, 1.7. So I fibbed this out to the gold side, which means very important for the day, for our chat. All right, now notice when I made the fibs here, we left gaps in price action. So if this is our main concern, 1/7 candle, we know that my gap strategy, right? We'll call it quote unquote gap. We call it price action filling, right? The next day hits the lower side, right? And then we were all about the 100 EMA for the short target. After the short target hit of the 100 EMA, we were going to go either over or under. Whatever happened, doesn't matter to me. But once we got inside the range of no tag from CPI, right? So that means this candle's Fibonacci in the gold right here. We started way under. We hit support 100 EMA. That was our short target, gapped up CPI. Well, the gap up CPI landed dead center of the golden pocket. So we have this candle completing the bottom side of the golden pocket. CPI gapped in, so this candle, 1.8. What I'm saying here is the high low of 1.8 takes care of the data under the golden pocket. So the golden pocket right here, let me move this freaking thing over here. Underneath that golden pocket is all set up, okay? And you'll notice a little bit was shied right here, but we took care of it at the open of the CPI, right? So notice just real close, 1.7, 1.8, and 1.8 left a little bit of range right there before it hit the golden pocket, right? So the CPI candle pushed up, but what does that leave us with? Well, bullish scenario continuation, anything above golden pocket like always. We use this on the daily, the weekly, the intraday, the high lows, and we always find a reason to use Fibonacci and especially first tag. Now let's take a look at the top of this big old red candle from the top side, right, of the golden pocket. This is outside the golden pocket. We're between 593.56 and 597.77. This whole range was untested. So this top of 1.7, right, that's where I wanted to see the SPY, and of course ES, magnet 2 off the 15. So I used a daily Fibonacci, and then I fibbed out the opening 15, And I said, well, if we got a magnet over the golden pocket of SPY, so we're just taking that 15 range, anything above 596.45 was going to the no tag 597.77, all because of the daily January 7th candle, right? Makes sense? We talk about that a whole bunch. So we've been getting a lot of questions, or I've been, in messages about setups, okay? Fibonacci and how to set up the day, the strategy in the VWAP. So tomorrow, I was going to do a little options class for market flow and swings. We got a lot of time before a lot of the crazy long-term stuff comes in. So we're going to do a setup tomorrow on Fibonacci and how to set this stuff up day by day. We're going to focus on the daily chart. We're going to make it a mini masterclass on everything magnets, Fibonacci's, and algos. And we're going to talk about the Powell candle and how we have to magnet up here to fill it. We're going to talk about how we got this to come all the way back up, and intraday we're utilizing these daily candles to find magnets in trend, and I'll show you how I use everyday candle, and I'm going to show you what candles I use the most, what candles are the most important. Some of these candles out here are way more important and have way more important Fibonacci sequencing than others. Okay, these algorithms talk to each other. These computers know what the other one's thinking. I promise. It sounds insane, but the Fibonacci points and where you draw them is exquisitely important, man. I'm telling you right now. And we're going to go over a class on that tomorrow. So about 11:30, I'm going to start a little sooner, 11:30 a.m. Central tomorrow morning. Excuse me. We will be live on this YouTube channel. So if you want to jump in and hop in with us, I will be going over an entire structure day of how to use these Fibonacci's. We have videos on how to do gaps. I've never done a large masterclass on it where we do a big live stream and I stream it live. So you guys can ask as many questions as you want about the Fibonacci structure, how the setup is, and how we predict these markets every single day with over-unders, why those over-unders and algos are important, what the heck even is an algo. I'll touch on all that stuff tomorrow, probably part one, because it's going to be so long between algos and Fibonacci's. But we're going to start with my core class right there on just the fundamentals of what we use. It's nothing special, but it's how I view the Fibonacci's, the gaps. And I can't give out too much algorithm stuff, but I will show you guys a lot of that as well. So if that sounds good to you, hop on the YouTube tomorrow. If you want to trade with us live, link is in the description. If not, excuse me again. We'll see you on the next YouTube video. Take care.